colleagues, for inviting me to moderate this excellent panel that has been assembled today to discuss the ship finance landscape. This topic was moderated in Limassol last year by my colleague Jason from Dickinson, who also moderated a similar panel discussion in Athens last month. So I certainly have big shoes to fill. I'm very pleased to refer to Jason as my colleague from Dickinson after we've opened the Dickinson office in Limassol last month. And the fact that Dickinson was so keen to open an office in Cyprus to add to their international network of offices highlights the development of the maritime cluster in Cyprus and the high level that it has attained internationally. I will now introduce a panel that I think needs little introduction. So we have Nikolaos Pavlidis, Head of Shipping at Bank of Cyprus. We have Milios, Head of Ship Finance from Eurobank. Dimitris, Tzavaras, Head of Shipping from Hellenic Bank. David Grant, Managing Director, Ship Finance, ING Bank NV, London branch, also at the Liverpool Bank. Right, let's kick off the discussion with a question to all the panelists. And let's start with an overview from the panelists on their views and perspective on the ship finance market and what they can each bring to the ship finance table. We have witnessed a year of turbulence and geopolitical volatility, including challenges set by the decarbonisation regulations, which are really starting to bite. And sanctions continue to have an impact. How have each of the panelists withstood these challenges, and what can they each bring to the ship finance table? So, if you want, we'll start with Nikolaos.
Sure. Thank you, George. I think 2023 has been a challenging year in many respects. There's been high interest rate environment, geopolitical tensions, sanctions, regulations which are a little bit unclear to me and to many people how they will evolve in the future. I think this creates an environment of uncertainty, and banks go closer to the better risk. And that has created a two-tier environment where the better risk is chased after a lot more than the middle to higher risk. So this is where we are, and it's interesting times, and I'd like to see how this will evolve.
Dinos, can you add something to that?
Yes, first of all, I'd like to thank Nikolaos Bornozis and the Capital Link team for having us here. It's an honor to appear in front of this distinguished audience. We have remained very active. Last year, we keep doing business. We are, as part of a traditional leading shipping finance, ship lending group, we are very committed over the long run to the sector. I do not believe, despite the existence of geopolitical volatilities, despite the emerging decarbonization trends, and of course, despite the sanctions, both the ongoing ones and the ones that keep appearing every now and then, complicating the exercise for us. We keep doing business, as we have. We keep working with clients who have demonstrated their ability to weather such crises, and even emerge stronger after them by taking advantage of the right opportunities. Decarbonization for us is a matter of a long-term strategy and a long-term trajectory that we need to follow in order to gradually improve our portfolio indicators. There are certain voluntary measures taking place to start measuring the key indicators now, but it's a long race with no visible end, as many of the audience indicated in a question to an earlier panel. Sanctions have two dimensions. One has to do with the way that banks process transactions for the clients, and we need to be extra cautious in order to keep these transactions running smoothly with no disruptions, which is, as I said, becoming an increasingly complex task for us. But the other aspect of sanctions has to do with the impact on global trade. There's a trend towards longer alternative routes, but this may also have a benefit for our clients. So overall, we keep doing business as we have so far, and I believe that these factors are all part of an ongoing game.
Nicholas mentioned that there's a tendency to move towards more risk-averse deals because of all these issues. Is that a view that you also share?
Well, it's always a matter of properly assessing the risk that is presented to you. Nothing more, nothing less. We do our assessments, we perform our break-even analysis, stress test, and most of all, we look at the quality of the counterparties, which is the most important element. So in this respect, there's no change in risk appetite, and there's no compromise, on the other hand, based on any market conditions that prevail.
Thank you, Dimitri.
Thank you very much, George, and thanks to organizers for having us here. No, beyond any doubt, shipping is anything but a popping industry. Especially during the last 4 years, we've seen pretty much anything from pandemics, wars, geopolitical tension, triggering sanctions and trade disruptions, as well as an inflationary environment and hiking interest rates. As demand for shipping is, as we all know, is a derived demand, basically for shipping services. We see that our industry is widely exposed to a number of known risks, but most importantly, unknown risks. Having said that, considering that these risks cannot be captured by any cash flow model or any projection, most of the times, we have to rely and we have to build strong relationships and take a great value of the counterparties that we enter business with. It's the right choice of clients that ensures the viability of any shipping portfolio and any shipping transactions. Having this in mind and by abiding to our strategy for conservative financings and by acknowledging the bond cycle where the market stands, we have managed to withstand the challenges during the past years in the market and continuously been active despite the turbulence observed. And we have a clear mandate to continue doing so also for 2024. Thank you.
Thank you, Dimitri. David, maybe you're a bit different in that you're not representing the Cypriot banking sector.
No, I'm not. No.
So, have you got any different views for that reason, or what's been said?
I don't think so. I've written down on my list here some sort of words that I didn't expect to put down for ship finance: volatility, geopolitics, decarbonisation, regulation, sanctions. And you start thinking, well, how is shipping performing? How is shipping going to manage all these things? But it's incredible how resilient shipping is generally, and also ship finance. I think, though, the outlook is going to get tougher. It's not going to get any easier, I'm afraid. Sanctions are there to stay. Regulation is there to stay. And unfortunately, ship finance is also heavily regulated. So we're also going to see capital costs for ship finance increase. Now, that's some negativity, but let me put some positivity in there. How does ING look at ship finance? What do we do to make a difference? We recognise that basically capital is the most scarce product around in shipping. When I first started in shipping a long time ago, it's 35 years, somebody said to me, capital is a privilege, not a right. and you have to respect that. Capital won't always be available. So what does ING provide? ING wants to provide consistent capital. It's all very well to lend to an industry that's doing well, which it is. It's all very well to lend during the good times, but the important thing is to be there during the difficult times. So from our perspective, we want to be a provider of consistent capital. I think also I'd like to just say, and I do agree with my colleagues here, that there is a huge amount of liquidity looking to come into shipping. But is it the right liquidity? And that's a question I'll leave out there.
Thank you. Now I'm going to ask the panelists to get out their crystal ball. Inflation continues to apply pressure to interest rates. What are the panelists' predictions regarding the movement of interest rates during 2024? And what impact will these fluctuations have on the cost of ship finance? Nicholas, do you want to take this question?
Sure. I'm not sure I'm qualified to make predictions on interest rates, but I think the expectation is for 2024, I think you asked, is that the interest rates will remain at or above the 5% mark that they are today. Not because of the uncertainty, because of the relatively sticky inflation, elections coming up in the US and other parts of the world, I think a lot of people do not factor in a significant reduction this year. Personally, I think that interest rates will remain higher for longer than people had originally expected.
Thank you. Dinos, do you want to add something?
Yeah, sure. So I fully agree with Nicholas. I won't dare to make a prediction. Sorry, I left my crystal ball back in the office. But if we were here towards the end of last year, I believe the consensus would be that we would look at maybe 4 consecutive rate cuts by the Fed during the year, maybe a 1% overall decrease in rates by the end of this year. Now, apparently, because of the course of inflation in the US, we are way off this target. I agree that higher rates will stay around for longer. And as Nicholas said, the US elections, especially if they lead to a radical change in policy with inflationary side effects, this could even delay rate cuts for an even longer period of time. Regardless of this, though, I believe that the high interest rates are not the major determinant in an owner's investment decision. And I've attempted to quantify this. For an average loan and an average vessel, a 1% increase in interest rates would probably lead to $400 or $500 per day increase in the break-even point, which at fleet level might be a large amount of money, but it's not dramatic. Whereas freight rates, on the other hand, vary by the thousands. So provided that all fundamentals in making an investment decision are in place, I believe higher rates would not deter a ship owner to make a decision. Secondly, another factor that sort of alleviates the high rates issue is that owners are generally highly liquid. So they earn in parallel interest on their deposits, which to the extent that the ratio of deposits to loans, lending exposure, this also naturally hedges them to some extent against the higher rates. Now, on the bank side and on the lending side, we always perform our assessment carefully based on the prevailing conditions. We run our stress tests, so we are always prepared to lend if all parameters of the equation are in place and they make sense.
Thank you. Thanks for that interesting insight as well that you added there, Dinos. Dimitri, David, do you want to add anything to what's been said?
I'm happy to go ahead. I'm probably a little bit on the other spectrum in terms of the consensus view is that interest rates will drop. Now it's been put back a little bit. It was going to be March, now it's May, June, perhaps a little bit later. But I think, as Dinos mentioned, you've got, I think 60% of the world population is going to the polls this year, particularly the US. If Donald Trump does get in, I suspect he'll cut taxes. And we have a really full labour force around the world. So I wouldn't be surprised to see inflation tick up again from where we are now. And history has always shown that, yes, inflation can dip, but it has a habit of coming back again. And if it comes back again, interest rates have to rise. Right now, I know that goes right against the consensus that dollar rates will come down, but I wouldn't be surprised if we see a second wave of inflation at some stage. That's my view.
So you've got a different crystal ball to the our other panelists.
I've got a different one, probably a cheap one.
Okay, so I'm going to ask quite a difficult question now. What would you say is the single biggest impact on bank lending in the past year? Single biggest impact. And again, I'll start off with Nicholas and Dinos, and please, Dimitris, please feel free to contribute any additional comments.
All these things that were mentioned had an impact on lending and will continue to. Obviously, geopolitics has and have a big role in our consideration and our analysis nowadays. I would dare to say, if I'm honest, that on my everyday life, the biggest impact was sanctions and compliance. The attention to the changing sanctions and the evolving geopolitical situation has played a very significant role, and the bank needs to stay alert on these issues, and it's now taking. It has always taken a significant part of our time, but I think it's taken an unprecedented high amount of time now.
Yeah, I don't think anybody would be surprised by that comment. Dinos, do you agree?
I fully agree. As I said, in the way that we work, there hasn't been a dramatic negative impact or deterioration. Of course, we are all on our feet monitoring developments. I believe that the factor of technology in the defense sector speeds up conflicts and geopolitical instability, and I don't know. What I'm really worried about looking forward is if the current conflicts give rise to a broader global escalation that could really disrupt trade and that could really affect the availability of capital. It could really affect inflation. Well, I don't think we are there, and hopefully we will not get there, but I fully agree with what we said. Let's keep doing our business prudently, in a disciplined manner, and I believe that we will be able, both our clients and ourselves from our own perspective as financiers, to keep doing our business while absorbing these turbulences, as we already have done multiple times in the past.
Thank you, Dinos. Sorry,
From my end,
Dimitri.
I can only echo what my colleagues mentioned. In my view, it's the interest rates, the persistence in interest rates, and the persistence in the sanctions and the regulatory pressure, basically. And whilst when it comes to interest rates, it's something that can be factored in. We can follow the yield curves of the interest rates going forward. But when it comes to sanctions, it's something that we simply cannot see how this will develop. And there have been cases where we had to reevaluate if we not pursue good business that made sense in terms of numbers due to sanctions and regulatory requirements. So that's something that affects us big time.
I'd like to move on now to discuss financing options. Our panelists this year are drawn exclusively from the banking sector. We've discussed already a number of challenges. What I would like to ask is, these challenges, are they changing the way that ship finance is being structured? Is it still a case principally of plain vanilla finance? Is there any chance of sprinkling some chocolate chips on top of the plain vanilla? Let's start with Dimitris this time.
Yes, thank you. I mean, for us in Hellenic Bank, regardless of what the challenges that we're facing at any given time, we follow a strategy of monitoring the policy cycle where we stand. It's in every moment, both in terms of freight rates as well as asset values, and adjust our structures accordingly. This by no means doesn't mean that we're excluding for our financings any of the traditional market segments, but we simply need to structure accordingly and adjust our financing terms so that we avoid that we are overexposed with high leverage in an asset during a booming market. Coming to options that are available out there, we acknowledge that recently we have seen increasing competition from alternative financiers, but in my view, bank lending will continue to be the easiest, the most cost-efficient way to finance a vessel. And to also add to that, that it is a way of financing that has been also tested throughout the history during very challenging and turbulent market times. Now, in terms of if it's going to be plain vanilla structures, yes, in our view, I mean, simplicity is blessing. So basically, try to keep things simple, but at the same time, we'll also try to be innovative by adding in our structures terms that allow the total cost of funding to be slightly reduced, so that we can also pass on this benefit to our clients.
Thank you, Dimitri. David?
I'm glad Dimitri said that we're going to stick to traditional shipping finance. I still believe that the best type of finance for shipping is the term loan. Yeah, we've financed depreciating assets. Nothing's changed. Shipping hasn't changed fundamentally in all the years, and I still believe that the best form of finance is a term loan. Yes, bonds are out there, and they may suit certain companies depending on their employment profile and the structure of their balance sheet. But I still think it's the traditional. But in terms of the sprinkle that you're talking about, sustainability-linked loans are probably all the talk now. This is where banks will offer and will provide discounts on the margin for sustainability-linked financing. This is where I think the sprinkle does come. That they will continue to develop. They will continue to grow. We're looking at green financing as well in the bank. And the difference, I guess, for ING compared to my colleagues here, is that ING is a global bank. So we operate in many different parts of the world, and shipping isn't the only business that's being decarbonised. We're looking at oil and gas, we're looking at aviation, we're looking at real estate, we're looking at a huge number of businesses, and in the bank we have a framework called Terra, which basically targets the 9 most polluting businesses that we finance and look to decarbonise. So we do bring and we look to finance structures, and we bring structures into shipping that we've learned in other businesses. But for me, the term loan and the traditional finance will always be there. But if I can say one other point, I think from our perspective, it's about finding the right owner. We put a tremendous amount of work and effort into financing the owner. It doesn't matter about the ship. I know that sounds strange, but for me, I'm not a ship owner, I'm a financier. So I finance people, I finance individuals, and it's still a personal business. So that for me is where I come from. And one other point I would just say quickly is that for me, the best ship in existence is the relationship. Thank you.
Thanks, Dave. Some very interesting points there. want to talk syndication. So until now, there's been a reluctance from Cypriot banks to syndicate loans. Do our panelists representing Cypriot banks foresee any change in this approach? And is this possibly a way to increase the size of loan that is being offered? Again, I'll start with I'll start with Nicholas and Dinos.
I don't think there's been a reluctance, really. It's just there hasn't been appropriate facilities to be syndicated, and I think what we do at Bank of Cyprus is family controlled and run businesses, and most of the things we do are bilateral facilities, but all the things that we have currently in our books. But having said that, I think larger, more corporate, multi-ship transactions are things that we can do, things that we have looked at, and we've actually considered transactions that a transaction last year that we could have syndicated, possibly to and hopefully to other Cypriot banks. Personally, I would like to promote the ship finance sector here in Cyprus, not only because it completes the circle of the cluster, the shipping cluster, but also because it helps ourselves with establishing a center in Cyprus for ship finance, which needs to be seen and promoted more. But I think without having anything in mind, this is something that can be done, and watch this space.
Well, we will watch that space with interest. Dinos, similar message?
Similar message, absolutely. I believe that the overall approach and philosophy in ship lending by the overall approach and philosophy that we all adopt in ship lending in Cyprus is very similar. The level of communication is also excellent, and I believe that if a deal emerges that would require a cooperation and a syndicated structure, we would very happily look at it, provided it falls within our lending scope, of course. Now, having said that, let me add the Eurobank dimension, because we belong to a group that is much larger and has the capacity to absorb larger deals. So if a deal came to us, we would naturally first opt to accommodate it within our group in a syndication with our parent bank, which has a capacity probably twice of the entire local market today. It works with large clients, it has the expertise to accommodate both large transactions and to act as agent in syndicated structures. And in this way, I believe we would offer our clients the best of both worlds. That is, on one hand, we would offer the efficiencies in terms of timing for the approval, negotiation, implementation of transaction, and also cost efficiencies of dealing with a single bank. Whereas on the other hand, we would open the door for our clients to cooperation in either Greece, Cyprus, or Luxembourg, which is involved in some transactions that we do. And this has in the past worked very successfully and has been appreciated by our clients. So without precluding a local cooperation, I would welcome it if an opportunity arises. But our first natural move would be to see how we could accommodate it at a group level.
I can see there's a bit of a difference in approach here from Eurobank compared to Bank of Cyprus, and Dimitris, possibly Hellenic Bank is in the same position as Bank of Cyprus?
Yes, from my end, we would welcome syndicating. Of course, we will still maintain our lending criteria as we would do in a bilateral loan, which undoubtedly offers more flexibility in terms of structure, in terms of negotiating with the client. Having said that, we know each other, we've been cooperating also with the rest of the banks locally, so we'll be more than happy to also join forces when the right deal and the right opportunity arises.
Thank you, Dimitris. I now want to have a chat about shipping funds. So shipping funds remain an attractive option for raising capital, for ship acquisition, and have been performing well in recent times. My question is, how do the banks view the continued popularity and relative success of shipping funds? And what role do they have to play in this market? We can again start with Nicholas and Dinos, and then move on to the other panelists.
Sure, I would say that shipping funds have, for the greatest part of my career of 30 years, have always been there, to a lesser extent in the beginning, but more as in the notice when the world fleet expanded more and some of the Western banks retreated from ship finance, so they filled the gap. I think shipping funds bring capital in a wise way. Perhaps they have a different perspective in that they're seeking return in a shorter time horizon. But I don't see them as competition. I see them as complementing what we do, and we haven't worked. They can bring in mostly equity, but also financing as financing third-party projects. We haven't worked with the fund, but I wouldn't preclude that happening in the future.
Thank you, Libera. Dino?
Well, our culture and DNA is geared towards private owners, to be honest. Although there are funds that have been doing a tremendous job, and some are present in this forum. We like the presence, long-term experience and commitment of a private owner. We build relationships over a very long period of time, and it has been proven that in case of prolonged market downturns, a private owner will have a longer-term perspective and would not shy away from injecting more capital if needed, while reaping the benefit when the market eventually turns upward. So we have not so far lent purely to fund structure, because we need the commitment and of course the credit enhancement, which is provided in several ways by private owners. Having said that, and as Nicholas mentioned, it's healthy to have an alternative lender in place, provided that they also make prudent investments, and it doesn't acquire such an extent that it may lead to an overheating of the market with adverse effects in the medium to long term. And as I mentioned at the beginning, there are funds that have been doing a tremendous job. They're based here in Cyprus, and we'd like to see them grow further and thrive.
Thank you. Dimitri, David, do you want to add anything?
Other than I agree with Dinos, to be honest with you. I think we should never turn away liquidity into an industry that requires capital, and an industry that needs new liquidity all the time, and in a volatile business that for a while commercial banks will be there, we hope for a long time, but the environment changes, and therefore it's important that we attract and we look to attract other forms of capital, in my view. So I kind of agree with Dinos.
And it's always good to have different options. You say you need to have that flexibility, and we're talking about the success of the maritime cluster in Cyprus, and part of that success is to have shipping funds, I think, that are based here as well. Right, and I'm going to move on to the elephant in the ship finance room, a green elephant, decarbonisation regulations. So the obligations imposed on ship owners by the decarbonisation regulations are on an upward curve. And the imposition of the ETS is setting its own specific challenges for ship owners. What is the current impact of decarbonisation on ship finance? And let's have a little change in the formation. Let's start with Dimitri and move on to David this time.
Sure. George. First of all, let me start by mentioning that in this exercise, these games as financiers, we're not the first movers here. I mean, we maintain a close dialogue with our clients. We trust our clients. We try to understand their strategy when it comes to ESG and green initiatives, and how these are adopted in their operating models, and we support them to the extent possible. Having said that, as a bank, we aim, from our point of view, to assist in this by abiding to our ESG initiatives that we have in Hellenic Bank, not only shipping but in general in our financings. And this translates in ship financing by aiming to finance younger vessels in an effort to reduce the average age of our collateral portfolio. Of course, this is easier said than done. In order to do this, we try to attract financing of eco-friendly and younger assets by offering incentives to clients, both in terms of structuring as in terms of pricing incentives, in order to be able to attract these financings.
Thank you, David. David?
Thank you. I mean, as many people will know, ING Bank is a member of the Poseidon Principles, which is the framework that a number of international and other banks have put forward for decarbonising their shipping portfolio. So what does that actually mean in practice? Every ship that we finance, we put through an internal model to see how it performs versus the trajectory. You can either be above or below the trajectory. It doesn't mean if you are above the trajectory that we don't finance those ships. That's not the point here. What we're trying to do is use this as a framework in which to engage the ship owner to have a discussion as to which direction of travel they're on. What's their strategy in terms of decarbonisation? So if you ask me now, would I finance a conventional fuel tanker that you order today? Absolutely. That's not an issue at all. So from our perspective, we are more selective. We are looking to finance ships that meet as much as possible the decarbonisation that we're all looking to achieve. But as I say, we know that there is not one solution here. That we know that methanol, ammonia, hydrogen, LNG, all of these fuels are being discussed. And if the ship owners aren't there yet, certainly the banks aren't. So we're not going to dictate that. I think you are seeing a two-tier market, I would say that. I think you see a two-tier market in the sense that some banks don't mind. Some banks aren't too concerned about the environmental issues. Other banks are. We are definitely a bank that is concerned, but it's all about transparency, and we're there to work with ship owners to decarbonise in the correct way. What I mean by the correct way, working with them to find a solution to these issues.
So, David, is it fair to say it's more of a carrot than a stick approach to encourage ship owners to pursue a path towards maximum sustainability?
I'd never give a stick to a ship owner. I think I've learned that for one thing in my career. Yeah, you could call it a carrot, I think. I think that's fair to say, a carrot. As I say, bankers, we've all learned, I suspect on this panel, we've come up through a credit process. We all learn how to analyse credit. Now we're being asked to learn how to analyse sustainability. Frankly, I'm not the best at it. So for me, it's on a journey. It's a carrot. We're trying to do baby steps, I think, George. That's what I would say. We're looking at baby steps to see if we can improve the carbon footprint of shipping through the portfolio. And I think ING feels it can play a role in that, because as we all know, capital is key here. And if we think that the costs of decarbonisation are high now, there's nothing to what it's going to be in the future. It's going to be significantly higher for every ship owner right now. I mean, I see the balance sheet. I see the balance sheet of many of our clients already, and the costs that they're incurring just by retrofits, just by adding a few improvements is huge, and we haven't even touched the tip of the iceberg. So from my perspective, it's a journey.
Yes, and a bit of an uncertain journey. I think we all acknowledge. You mentioned methanol. Methanol has been mentioned quite a few times during the course of the day, and conversions and retrofits. What's the and I can, anybody can chip in here. But Dave, I'll start with you. What is the bank's approach towards financing conversions to reduce carbon emissions?
Yeah, absolutely. I think we're here to finance new buildings. We're here to look at financing second-hand ships with retrofits. We are looking to, again, coming back to what I said, I think for us it's the owner. We are fixated on financing the right company and the right owners, and we believe the right owners are on the right path. So if that owner says, I've ordered a VL Vlak, as we now call them, I think, then absolutely we would look at that. If somebody said we're ordering a CO2 carrier, if it's the right owner and they tell me the reason they've done it and the strategy, we would absolutely be there to support that. And same with retrofits.
Thank you, Dave. Ivana, please.
I could say something. I think it's a journey, as David said. Banks need to be part of this. All the participants in the shipping industry need to be part of this. The shipyards, the engine manufacturers, the port authorities and local governments creating infrastructure, charterers, ship owners, and certainly banks need to be part of this. And I think all banks will need to contribute in this transition.
And that's a good point. Everybody needs to pull together on this for it to work effectively.
Exactly.
Now, I think stomachs may be rumbling, so as we're approaching lunch, this is my final question. Basically, we started off this discussion by looking at the challenges until now and how the banks have withstood those challenges. 2024 has already brought a new set of turbulent events with more on the horizon. We have the continued tension in the Middle East. We have the Houthi rebel attacks on vessels in the Red Sea, which are continuing. Only last week, a vessel had to be abandoned because of such an attack. And as already mentioned, there is a real possibility that Donald Trump will be re-elected as President of the United States, which will bring with it inevitably geopolitical, environmental and economic consequences. So, looking forward, how Panelists believes that such high levels of turbulence, which go hand in hand with uncertainty and instability, will affect the ship finance market. We can, let's start, again, changing the formation. We'll start with Dimitris and then go to Dinos. And then by all means, as it's the last question, I think I welcome comments from all the panelists to round it off.
Sure, thank you, George. I mean, listening to the question, listening to you outline the question, I kept thinking that has there actually been a time in shipping where there was not like a long period without turbulence or without uncertainty? I would doubt so. So, having said that, history in our industry has proven that as an industry we have a remarkable ability of successfully navigating and identifying opportunities even during challenging times. I mean, even now that we see tension piling up and uncertainty piling up, we see that this, okay, undoubtedly for the wrong reasons, of course. I think that no one can question that, but this has led to positive market sentiment in the container sector, in the dry bulk sector, rates that seem to be climbing. I'm not touching upon the tankers because this has been in a very healthy level to begin with for the past year or so. So what I would like to say, and my point here is that this uncertainty and this volatility is inherent in the shipping industry. It's something that we have to digest, and we have to learn how to live with it. As financiers, we want to be active in this market. I mean, an financing transaction is not like an engagement for 1 or 2 years. We can extend ship finance project in extend to 5 or 6 years or even more. This means that it's considered more than a marathon rather than a sprint. And during this lifespan of a loan, vessels often encounter peaks and troughs, market peaks and troughs, which are inevitable. What is important to highlight here is that we have to build trust on client relationships and team up with clients who have proven their track record, have proven that they're able to navigate throughout this cycle. And I think that this, hand in hand with the right structure, is the way to ensure that we will have a successful financing transaction and a ship financing portfolio, which can stand and remain healthy, during these market challenges. And this is my view. I mean, regarding the ship financing, continue doing what we've been doing. Yes, I say that this effect will continue in the business. We cautiously approach the market. We conservatively structure our financings, and it's something that we're here to support the business also for the medium to long run.
Thank you, Dimitris. Obviously, you make the point that we just can't look at only the following year. The events are likely to change and likely to be turbulent for many years to come. And that's all obviously built into the approach to ship finance. I think we're very short of time, aren't we? So, Linos, can I just ask you to make a few key points just to round it off?
Yes, thank you, George. We are long-term players, so the way that we work and the way that we do business is not affected by short-term events. As I mentioned earlier, my only concern would be a global escalation beyond control that could derail everything. I think it's a rather extreme scenario. Other than that, the industry has proven multiple times in the past its ability to weather crises during turbulent times. Shocks are not uncommon, and in this respect, whoever is in shipping knows that volatility is a friend. But as with every friend, it's good to have it around, but we have to pay its appropriate attention and respect.
Thank you. Mr. Chairman.
Yes, just one final remark, if I may. First of all, I commend David Grant his comment about where he emphasised and highlighted the relationship, the personal relationship with banks. We've got a bit of scar tissue, we've been around for a while. We're going back in a few years where when you referred, the panel was referring earlier to the interest rates. I've actually experienced interest rates between 15 and 20% at age 70. So, things can actually have been quite volatile. One minor point, if I may mention, which is a major significance as far as I'm concerned, is one basic statement, is that money will always follow a good deal. Irrespective of the fact that we have this infrastructure of complicated regulations, red tape, and all the other things which makes it so restrictive in terms of having a straightforward loan. The fortunate thing is at the end of the day, for somebody who's got the perseverance, the passion, and the professionalism, he will always find a way that he has a good deal. Money will always somehow come out of the blue and will always follow a good deal. Money will always follow a good deal. Thank you.
Thank you, Chairman. That's a very, very, very good point that can be often overlooked. Well, I'd like to thank all the panelists, Mr. Chairman, for your valuable contributions and insights. And if there's one word I would take away from everything that's been said, it's resilience. So thank you again.